Hi everybody, welcome to this CMC Markets. Today I'm going to review the chart of the Aussie dollar against the Kiwi dollar. Firstly, because this looks to me a chart that's very interestingly placed right now. Secondly, because this is a currency pair where we could see some action this week, particularly as we head into Thursday, where we've got a couple of events that could influence both the New Zealand or the Aussie dollar side of things, in the form of the Reserve Bank of New Zealand meeting and the Australian jobs number, which could have a big bearing on how people are seeing the Reserve Bank's next step and therefore what happens to the Aussie dollar. I'm looking here at a daily chart of the Aussie against the New Zealand dollar. I guess the first thing that grabbed my eye about this is that for quite some time now we've seen some nice divergence developing. I've used the MACD indicator to show that in the chart below, or the box below the chart. But what I mean by divergence is we can see that the MACD, which is the black line here, is now making consistently higher lows, while price itself has still been making lower lows. So that indicating that momentum is falling in the chart. This is what the MACD indicates. So we've got falling momentum while price is still just struggling a little bit lower, and often that's telling us that the market is setting up for some sort of a trend change. Now we've got some possible indicators of that trend change occurring now. The first is that these last two little lows in price form a double bottom, two lows at very close to the same level, and the market's thinking about triggering that. It's just broken marginally above the peak between the two lows, which is the completion point or trigger point for a double bottom, but hasn't really got conclusively past it yet. Another sign as well of possible trend indication is the MACD itself. So we can see that the MACD, which is the black line, has now crossed above its moving average, which is the signal line, and that's the classic MACD buy setup, and that's also indicated by these histograms are moving above zero. So those are above zero, and a lot of people think that the best MACD setups come when you've got divergence followed by a buy signal, and also particularly when you've got this sort of divergence which starts from a low level, and the higher lows then come at significantly higher points on the MACD. So MACD is ticking all those boxes now. The one difficulty, as I say, with this at the moment is whether or not this market's going to go on with it from here. And certainly this blue line here, which is the 55-day moving average, might help us. So if we were to get up well clear of this now, that would suggest that we have completed the double bottom after this MACD divergence, which would be a potentially bullish outlook for this chart. But from a trader's point of view, I think another thing that a lot of people might be hoping for would be potentially for price to back off the 55-day moving average, perhaps fall and give us a correction now of this latest move up, and some sort of a buy setup over the next few days at a Fibonacci level, or that sort of a setup which might give us a closer entry point then, and then set up for price to then start moving away up through the double bottom and up to a deeper correction, perhaps up to around the 61.8 or 78.6% level, which, as you can see, is around about 1.06 or 1.069 cents. So if we do get any sort of a pullback and a setup, I'll post that either on another video or to the chart forum over the next few days. Thanks for joining me today.